Welcome to Wall Street Sizing Up. We're glad you've got a great show today. But before I get started, you know that we're owned and operated now by StockTrade.tips. That's StockTrade.tips, where we help you profit off the insider knowledge of the hedge funds. That's right. Today, the show. About 60 days ago, we talked about our three best cannabis stocks, not for just 2020, but going into 2021. The third best was a REIT called IIP. And they've come under some fire. So a little bit of controversy there. We're going to talk about that. We're going to talk about two other shorts, and then we're also going to talk about why is Goldman, why are they in penny stocks, and what are they doing? So with that said, the staff is off. So it's just me, just so you know. No production value at all. So we're going to jump right in. Let's go. You'll see it says the Bear Cave on the screen there. This is a newsletter that I was introduced to about a month ago. It's this young guy named Edwin Dorsey. He's got about 8,000 subscribers now. You ought to subscribe. Essentially, he takes the research from other firms. He puts them in this newsletter, but it's not about what the stocks are doing that are driving their growth. It's what they're doing, or maybe the fraud that they're promoting. So it's really about shorts, and it calls into questions a lot of companies that might be doing some questionable things, right? So one of the things on this, it's called the Bear Cave, and in this number 46, the first one I saw was IIP, or Innovative Industrial Properties, which we had done. It's a cannabis stock. It's a REIT, but it's a cannabis stock because their model is basically they do sale leaseback transactions with growers. So why is that good? Well, one is because they go in, they buy the industrial facility from the grower, and they lease it back to them. It gives them a return, and it gives the grower, it frees up cash for them to expand their business. Now, here's the thing. Cannabis has been legalized in numerous states now, so there's more competition. The laws have opened up, and so there's a lot more growers as well. But here's what they're doing. So he found a newsletter called Up in Smoke. By the way, IIP is a $4 billion medical marijuana REIT. Up in Smoke, this newsletter that he found, is basically stating this, is that the newsletter alleged Innovative Industrial Properties routinely overpaid to buy properties to lease back to its tenants. Okay? That can be a problem, right? So if you see the top one, Grassroots, they paid for their portfolio of industrial properties $3.7 million. It might be just one building, we're not sure. But then IIPR, or IIP, turned around and paid $4.2 million for the sale leaseback transaction. It's a little bit of a problem because that's a good 4x. Now, industrial properties like warehouses where they grow the cannabis at have gone up. So we don't know when they bought the properties. I'm guessing it was 2 or 3 years ago. So, some of these I could see, but there's one here called Ascend. They bought their industrial property for $312,000. IIP paid them $19 million for it. Right? Can you say they overpaid? I don't know, 50x, 60x here. It might be an overpayment, so that's definitely something to watch. But you got to believe that IIPR has done the economics. They know they can make money at whatever price they buy or whatever price they offer, or they wouldn't offer it, right? There's a lot more competition, so that might be driving up prices too. So that is something to watch. I will say this: the stock is up 900% since its 2016 IPO. The stock today is at 180. Yahoo has a price target of 192. The industrial tool that we use is called Simply Wall Street. Now, Simply Wall Street holds them in high regard. One of the things that they say here, it's trading at 52% below our estimated fair value. I'll get that in just a second. Earnings are forecasted to grow almost 40% per year, and earnings grew this year 250%. So their valuation, though, check this out. 100. So they have the price at 186. It's trading, like I said, at 180. Fair market, they're saying almost $400, 2x from where it's at. So long term, they still have this as a definite buy. One of the things that we like to do on the channel, which is very important to us, is we like to see who actually holds this stock, right? IIP, 77% of its outstanding shares are held by Wall Street institutions. That should tell you something right there. It is literally going nuts, and it's a REIT, and it throws off a dividend. But look who owns this. BlackRock, 16%. Vanguard, 12%. State Street, Morgan Stanley, D.E. Shaw. We're talking about titans of Wall Street here, guys, right? So I'm not concerned yet, right? But I will keep an eye on IIP. Now, as we move on here, he goes into a firm called Hindenburg Research. They published a Twitter thread where they criticized Microvision. Now, we've talked about Microvision before on the channel, that a few hedge funds have sized up, but they were trading in and out of it, and they're probably gone by now. But the ticker's MVIS. It's about $1 billion company, right? It's a laser tech company. So if you don't, they are LiDAR, right? They manufacture LiDAR. If you don't know what LiDAR is basically radar for the electronic vehicle industry. Tesla does not use LiDAR. I think they used to, but they're usually more visual cameras. That's what they use. But all the other EV manufacturers typically use LiDAR as their primary system for their autonomous tech. That's it. So Hindenburg in a tweet said, "We are short MVIS in a market gone mad. This is a $1.2 billion market cap corporate husk with almost no revenue or intellectual property." And they're saying their stock's risen from the lows, I guess from the lows maybe a year ago or 2 years ago, 5,000% on misguided retail euphoria over its LiDAR IP portfolio amid the broad electric vehicle bubble. I could see that, right? Especially if you have no revenues. It's very, very tough to value. Simply Wall Street did not have a lot of information on them. They've got them overvalued right now as well. In fact, I think I've got it here. I don't, but I can understand that. And so just wanted to draw your attention to MVIS. Next one is GSX Tech EDU. GSX, we saw, so the reason this kind of stood out to me as well is because we saw about 6 hedge funds basically just get out of the stock. This is about 30 days ago, right? And so the ticker's GSX, a $13 billion, it's a Chinese online education company, right? And if you've watched this channel at all, you know that I'm very suspicious of any and all Chinese companies. One of the reasons is that they don't have to follow GAAP procedures. Now, Congress is trying to change that, right? But they're not on the same playing field as all the other U.S. companies and other companies around the world because they don't have to follow GAAP procedures yet. But that's coming. If you don't believe me in why some of these Chinese companies could be fraudulent, watch the Mark Cuban produced China Hustle. Great film. If you've seen it, watch it again because it came out about 2017, but it's a very, very good watch on what some of these smaller Chinese companies do. GSX, right? So this Marcus Aurelius research firm is calling them a complete and utter fraud. They basically went to 7 employees who blew the whistle, and they allege fraud all over the board from GSX. Citron Research, who we talk about on the channel quite a bit, they call them the most blatant Chinese stock fraud since 2011. Muddy Waters calls GSX a near total fraud. Grizzly Research calls them too good to be true. Scorpio VC calls them a long planned listing scam. Since all this has come out, the stock is still up, but it is down 50% since the middle of since the third quarter. So want to call you attention to GSX. Next up, we're going to move quickly here, is MDCA or MDC Partners. Their ticker's MDCA. They engage in the provision of marketing, advertising, activation, communication, and strategic consulting solutions, right? And guess who owns 20% of them? That's right, our friends Goldman Sachs. It is definitely a penny stock. But I wanted to point this out to you because this is what we see on the channel quite a bit. If you see where my mouse is, that is December 21st. Now, before December 21st, Goldman Sachs, who you wouldn't think plays the pennies, but anything to make a buck, but they had right at 15 million shares of MDCA. They sized up on the 21st for 2.5 million more shares for a total ownership of 17 million shares. Well, guess what it did the very same day? In 3 days, it started to pump that day, and in 3 days, it went up 25%. I'm not calling Goldman Sachs to the mat here because we see this a lot with hedge funds, particularly in the biotech sector. This is not biotech, but everybody's doing this. Yesterday, we had 28 filings at the end of the day. And I can tell you, I don't want to really go through them all, but I would tell you about 10 of them were 15 to 30% pumps, right? There are times on the channel, and I can name these firms offhand that are getting 30, 40, 50, 100% pumps within a day or two, right? It's crazy. That's why stocktrade.tips, that strategy works. These guys are, when I say guys, I mean hedge funds, investment firms, small, big, large, whatever you want to, whatever size that they are, they're all LinkedIn lines. They all are connected. They are highly networked. That is their job. That is their number one job. And they have insider knowledge. And that's why what we do on this channel at stocktrade.tips absolutely works. So with that said, just want to draw your attention to the shorts. One of the ones that we had as a top cannabis stock, we still believe in it as of now. And I wanted to draw your attention to what hedge funds and investment firms do, right? Because they are LinkedIn lions. That being said, guys, thanks for watching today. I hope I've made this short enough for you so you watch the whole thing. Appreciate you guys. Watch your six. Go hard in the paint. We'll see you next time. Cheers.